You know, the markets continue to look like we're at a major pivotal point, you know, all the way back to the bottoms in 2000, early 2009, and this extended boom that happened during weak demographic times with massive stimulus. And of course, I keep explaining to people, the reason it keeps taking more and more stimulus is that the demographic trends and even now the technology trends of recent are adverse and have been adverse for a long time. They're just filling a giant hole, not understanding what's creating it. And remember what I always say, is this exponentially more stimulus or not? I'll show in the September newsletter, we just printed more. The Fed printed more since COVID, and actually even a little more than that since the repo crisis, more than all the money printing from early 2009 through 2018, where they started to taper. And of course they started to taper just a little bit, and of course they had to go right back because this economy cannot live without crack. And the illusion is, oh, when COVID tapers off, the economy will be okay. Oh, after some stimulus. No, this economy will never be okay until we deleverage all this debt and get rid of all these speculative bubbles that are just taking capital and hashing it. What's telling us that? Money velocity at the lowest rates since the early 30s, and it's gonna go a good bit lower. We finally deleverage. So what are we also looking at? We've got our cycles coming in, the most potent two cycles, the 90-year super bubble cycle, obviously the dominant one here, and the 40-year generation cycle, both pointing to long-term lows around late 2022. Now I'll tell you, both of these cycles should have already peaked somewhere between late 2019 and early 2021 at the latest. And of course, so all this stimulus has pushed us back farther from that. That means when this crash hits, it's likely to be steeper and harder. And I still think we're gonna do the most damage by the end of 2022. I do think now, since demographics continue, they bottom around late 2022, but they continue to be weak until late 2023 before the millennial turns us up again. We're gonna see a big hangover into there and maybe some lower lows in stocks, but I still think most of the damage is gonna be done by late 2022. So it's time to get serious. And we have, you know, the stocks are looking very toppy here. They keep edging up, but now they're correcting and they're looking toppy. I showed even better recently in my update to subscribers that HYG, the high yield bonds, are just have had, you know, obviously a big recovery from the COVID crash, but they are just plateauing out and cannot get to a new high and look like they're getting ready to make a dramatic drop. So I'm actually watching the HYG, which is still around 87, 88. It could go as high as 89, but that's it.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
That thing starts dropping, that'll be the best leading indicator for stocks unless they both go simultaneously. So we could be peaking here in early August. There's signs of a top here. I think late September, mid to late September is the most likely time. So if we continue to have a shallow correction here, then we should get one more run up. If the correction starts to get ugly near term, it's gonna say this thing's over. So, and remember, if this is the major bubble peak that I say it is, and it's anything like history, this first crash will be 40 to 50% plus, and my indicators now say this one will be over 50% within 2 to 3 months. So this thing's gonna come hard when it comes hard. So, you know, if we see this correction that started in late August continue to be shallow in the next week, it probably means, okay, this is a correction, we're gonna go up one more time. And then when we see a peak, then that could be on alert. This is the closest I've seen to this great top with all the indicators lining up, and the cycles are just coming in on this. So as I think I've said recently, this is the showdown between the central banks. And again, it's not just the Fed. Federal Reserve has been the most aggressive since COVID around the world, but the EU and Japan have been more aggressive, and China more than anybody coming into COVID. So everybody's been printing money. So this is a showdown between the central banks of the world and the most powerful cycle confluence, and you know that's my expertise, since late 1982. More powerful than late 82, maybe not quite as powerful is late 30, okay? So put on your seatbelts. I think this thing is starting soon. I say this market is going to peak before the end of the year. And again, first crash, we'll let you know within 2 to 3 months that it has happened. And you better be out before that. And I tell you, for people who are more trading oriented, there will be an incredible opportunity, and even a more predictable opportunity. Once this crash happens in 2 to 3 months, there's going to be at least like a 50% retrace of that, okay? And so that's going to be a really good, maybe 2, 3, 4 month run to catch on the upside. And then there'll be a long, grueling, maybe 1.5, 2 year bear market in stocks.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.